All right, we had a really cool trade this week that paid off big time, and there was some price action clues which I think are going to be really worthwhile learning about. So this was the trade in Shiba Inu coin, whatever the hell that is. All of a sudden it's gone ballistic and made the news, and Elon Musk tweeted about it, and we bought it way before this happened. And I just want to show you that that's not bullshit. So on the 3rd of October, we bought at 81.000000819, and that is all the way back 819. Like here. Where did we sell? We sold some at $29.50 and some at $32.40, and because we made such a shit ton of money here, cashed 100 grand out to Tethers, and still have 100 grand worth of this terrible thing, whatever it is. Anyway, our exits were here and here. First of all, I'm going to talk about the entry, and then I'm going to show you how we time the exit. So here we go. So before it broke out, we have this very, very obvious and long basing pattern. Now, consider the character of the price action here. One down, one up, trying to go down, failing, up, down, lots of overlap between the bars, up, down, up, down, up, down. Whenever you see this, this is classic trading range behavior. And trading ranges, what do we know about trading ranges? We know that 80% of attempted breakouts fail. So it's a very high probability to go short here, go long here, short here, long here, blah, 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 blah. But before it does this, inevitably, you get a clue. And that clue that we got was, you can see here how we go from being down, up, to things are in gear all of a sudden. And not just we're going up every bar, but each bar, the sellers are so weak they can't push it down below the low of the previous bar. Sellers are so weak they can't push it down below the low of the previous bar. Sellers are so weak they can't push it down below the low of the previous bar. After 3 days, enough was enough, and about here we knew that the game was on. And then it started to break out. Big candle. Now, a lot of people were tempted to take profits here. But the thing is, after months and months of going sideways, that can't work itself off with one bar. No matter how big the bar is. We get another bar. Now, this bar, see how we've got some selling pressure up at the top, and we get some selling pressure here. What this is indicative of is new people coming into the market. Some guys took profit here, jacked it down, and then it went up, and some people took profits here, jacked it out. As long as people are taking profits and doing their normal thing, there's no reason to sell, because there's new buyers coming in and they won't sell out till they show a profit and blah, blah, blah. We get this. Now, look at this. We have almost no selling pressure here. We have almost no selling pressure here. Now look at the range. Look how expanded this range is compared to the other bars. This is telling me that we're getting pretty close to the end of this round. Now, the catch is that after something goes this ballistic, almost certainly it'll have a second leg. So I started taking profits in tranches above here and then here. And that turned out to be a good thing, because it's back down here now. I banked about half the profit, let half ride. Almost certainly that will go down and then become choppy for a period of time, and then try and go up again. Very nice trade. Total price action things. So let's recap. The clue is things getting in gear just before that. Now, very, very strong clue. Works much better the longer the trading range has been in operation. So you can see here this trading range has been in operation from May until now, and then it broke out. So that's the play anyway.